Kenya's capital, Nairobi, has been bustling with construction for the last decade. Everywhere you turn, a building is mushrooming from the tiniest of land parcel. What's driving growth in this sector?
Kenya does appear to be a hub from the point of view of the financial sector, the manufacturing sector, the NGO sector, and a lot of people want to be here, which is why from the point of view of quality housing stock, that demand sort of is coming through. But I think from the point of view of a developer, what really drives them at the end of the day is returns and sustainable returns going forward. And I think the commercial property sector over time has had some of the most fair and sustainable levels of returns, both from a rental yield and IRR perspective.
Some experts say that the cost of construction in Kenya is reasonable and that demand is strong, translating into a sector that can flourish even without government support. But others argue that increased government intervention in provision of adequate infrastructure is critical to support this growth.
The sole provider or ideal provider of infrastructure is actually government. But you find that the private builder has to then compensate for that by putting infrastructure themselves. And hence, if you want to make a house cheaper for the person in middle income, and unfortunately, middle income areas also tend to be very unserved by infrastructure.
Through such intervention, developers foresee a trickle-down effect in the provision of more affordable real estate for both commercial and residential use.
If government was to simply sort the issue of infrastructure, in this case we mean road surface area infrastructure, water and sewage, just those two, you then find that a typical particular property, catering even to the middle market or any other particular property for that matter, simply goes down by 30–40%.
However, the provision of adequate infrastructure is just part of the solution. Some say there is more that is needed to fix the elusive affordable housing puzzle. This includes subsidizing the cost of building materials and exploring modern affordable building technologies.
I think from a developer perspective, incentives around input costs, so whether it is things like cement, whether it is things like iron, steel, and so on and so forth, to be able to make these things cheaper from a capital perspective from the point of view of the developer. I think from the point of view of maybe some zero rating some services, the professional services firms will be able to offer, because that would have the impact of translating to a downward price from the point of view of the property owner or property buyer. And then again, from the point of view of the financial markets, especially from the point of view of regulating how banks fund themselves and regulating the interest rate spread, I think that would have a huge impact from the point of view of making homes more affordable.
I think alternative building technologies apply not just in the low end of the market, but across the market. So we need to, in the commercial sector, be looking much more at, for example, using steel in construction. It's quicker. It might not be cheaper, but you can bring to market the development. So I think there's a whole lot of room for exploring building technologies throughout real estate.
Access to data in the sector has, however, been a key challenge for developers.
We don't necessarily have enough data on demand and what people are actually looking for in the residential market. So I think there's a big gap in terms of the ability to assess properly what the demand is for a new development. And then obviously the key constraint for developers or additional cost is if there are problems with the infrastructure and the availability of the infrastructure. That's a key constraint and a key issue.
Going forward, investors and experts alike anticipate that with proper policies, a stable political environment coupled by increased foreign direct investment in the region will help steer the sector's growth and inevitably contribute to the country's economic growth. But is this sustainable going forward?
The answer is yes. It will continue to be sustainable because underlying all this you have excess demand and shortage of supply. You will find that if today you say that you're looking for 1,000 square meters of space, it actually does not exist. What you may have to do is wait in line for a development that's upcoming. That begins to tell you your economy is at a good place, whereby you cannot provide enough of what is being demanded of. And it's an experience that then translates right across the building sector, be it cement, hardware, etc.
I think the current boom that we are seeing is actually set to continue. I think as well as you see the nature of our economy begin to diversify more into new sectors such as oil and gas, those are actually going to continue to lead into a real estate boom for the next, I think, 3 to 5 years.